Internal control over payroll normally starts with the production level employee. The person who's not on the production floor is going to typically be an hourly employee. So they're going to fill out time cards, or there's going to be a computer system that tracks their time, typically on a weekly basis. Also, the employee fills out, typically again on a daily basis, the amount of time that they've worked on individual projects or jobs within the production day, and that'll be used to track the time that will be charged to those individual projects or jobs. At the end of an accounting period, or at the end of the time period, those time cards and job tickets are approved, reviewed and approved by a supervisor, and those items then are sent on to a timekeeping department who is going to reconcile the hours per the time cards to the job time tickets to make sure that the hours that are charged to various jobs and projects are also accounted for as part of the time card. So everything agrees. The time cards then and the job tickets are sent in different paths. The time cards are sent to payroll, and the job time tickets are sent on to cost accounting. We go on. Let's take a look at payroll here. The job tickets are sent to payroll. The payroll department then recomputes or computes payroll based upon the approved time cards. The payroll department will produce a payroll register and also accompanying payroll checks. Payroll also agree the total value of the checks produced to the payroll register. Typically, also at this point in time, before any checks are dispersed, the payroll register will normally be reviewed by a fairly senior level person in the company to ensure that, in their opinion, the payroll looks appropriate and that the payroll disbursement will be proper. A copy of the payroll register then is sent to the account is sent to accounts payable, and at the same token, checks are distributed to employees. At that point in time, then the payroll register is processed so that accounts payable processes in effect, a check or a wire transfer to fund the payroll account. And here you can see a debit to cash for the payroll account and a credit to the general ledger account. Generally speaking, as a good control, most companies will have a separate payroll account for their various payrolls because of the type of transactions that flow through those types of accounts. Also, if we look over here on the right, job time cards then will be sent to cost accounting. As I say here, the labor distribution is sent to cost accounting, and cost accounting prepares the journal voucher for the labor distribution, and that will be debited to various labor inventory and expense accounts, and it will be credited to a payroll clearing account again, which goes to the general ledger. Now, I've also included up here human resources. Human resources really doesn't have anything to do with payroll in terms of timekeeping or hours distribution. Human Resources is responsible for approving and basically entering all hires, pay rate changes, deductions, terminations, and so forth. So Human Resources has control over in effect, the payroll master file, and all the approved payroll changes are initiated through Human Resources. Now, if we take a look at the different payroll processes again and look at payroll activities, uh, human resources themselves have no functional responsibility for payroll other than the authorization of changes, additions, terminations, pay rate changes, deductions, and so forth. That's what they're responsible for. They're not responsible for any part of the payroll calculation or computation. It's important to remember that supervisors approve time and the work, in other words, the job tickets performed by employees. There is a reconciliation of the time cards to the job card hours by timekeeping or some authority, and that ensures that employees are present and working, and also that the hours that we're paying are the hours that we're charging to various production projects. Payroll only calculates the employee's pay. Again, it does not authorize payroll transactions, nor does it have any custody to assets. The payroll register is created from a payroll run. The payroll register is approved, again, as I mentioned earlier, by an authorized manager. Usually certainly somebody outside of payroll, somebody typically either in the controllers or other department or other financial position. The payroll register becomes a basis for making a disbursement through accounts payable to reimburse the accounts payable account. Now, I do make a point here is in some cases payroll functions cannot always be adequately segregated. If the functions cannot be adequately segregated, management must perform sufficient detailed reviews to ensure transactions are properly authorized and they're properly executed, and the transactions were recorded to properly reflect management's, that should be financial, statement assertions. Okay, again, with payroll activities, we keep going on. Cost accounting reconciles payroll paid to the labor distribution report that has been computed from the time card. So what we're distributing in payroll expense equals the payroll paid. Paychecks are typically distributed through cash disbursements or some form of a paymaster. These functions have no relationship to payroll. Typically a supervisor should not be in a position to distribute paychecks because they already participate in the authorization of time cards and job cards. Now, on occasion, employees are absent or they're not available, and unclaimed payroll checks should be held in accounting. Now, we also know that in a lot of cases nowadays, it's almost, I shouldn't say it's impossible, but even whether you're an office employee or you're a factory employee, basically, many companies insist that paychecks aren't even, you don't even get a paycheck anymore. It's deposited directly into your account, which helps uncomplicate some of that process. Again, a separate payroll bank account is used to assist, so it's easier to reconcile cash activity in payroll, and we segregate our business or operating activities from our payroll activities. An individual who is not involved in human resources, payroll timekeeping functions, so forth, reconciles changes in the payroll paid in the current period with the prior period. So that means in the last payroll period, assume that we wrote our total payroll paid was $12,150,000. The next payroll paid, let's assume, is $12,350,000. So there would be an individual whose job would be to reconcile why payroll changed between those points in time. Also, all payroll bank accounts are to be maintained under general ledger control. In other words, no off-the-book accounts, reconciled and have appropriate review and approval on a periodic basis. That's typically at least on an accounting period or a monthly basis. All the payroll bank accounts per the general ledger must be reconciled back to their respective bank statements periodically in the recompilations review by manager, and the recompilations review by manager, not in basically reviewed, not involved in the cash, a manager who's not involved in the cash disbursements, payroll, or HR process. Now let's do just several questions on the payroll process. So number one, which documentation of a payroll transaction would best demonstrate management's financial assertion of occurrence? And we get back to the assertion process. Remember, when we're doing substantive testing, this is what the CPA is doing, is basically testing on the testing for the fact has our management's verifying management's assertions. So go ahead, Stop the video, arrive at your answer, and when you're ready, restart the video. Let's look at the answer to question number 1. What documentation of a payroll transaction would best demonstrate management's assertion of occurrence? And the correct answer in this case is C, payroll register entry. If we take a look at these documents, let's take a look, examine each document. Let's take a look at A. W-2 forms provide basically withholding information, and uh, they're really not proof of occurrence. If we look at an employee personnel record, B, again, that's not necessarily proof of occurrence. We just an employee personnel record. It doesn't pertain to the occurrence of a payroll transaction. Okay, what I'm going to do now is I'm going to skip down to item D, because time card is proof of a transaction. However, a time card are basically documentation of the actual hours worked, and if we use clock cards as our sampling unit and we trace them to the payroll register, that's a test for completeness. So in this case, the actual basically occurrence would be C, the payroll register entry itself. So that's the answer to number 1. Let's try number 2. Number 2, which of the following functions would approve changes to payroll? And again, if you don't know the answer, stop the video and review the answers. Once you reach your answer rather, let's go ahead and restart the video. And number 2, which of the following functions would approve changes to payroll? Now, I didn't underline this, but the answer in this case would be B, human resources. And if we look back at our flow chart, we would understand that human resources approve all changes to payroll. Okay, let's go over the last question in terms of the payroll process. And it says, which department would most likely approve changes to employee pay rates? And again, go ahead and stop the video, arrive at your answer. When you're ready, restart your video. Okay, number 3, which department would most likely approve changes to employee pay rates? And the answer in this case would be, again, human resources. So with that, that's the end of our payroll video. Again, thank you for your time.